Good day. This is Al Kluis. I'm here with your inaugural version, the first edition of Soy Market Watch. This is a weekly publication sponsored by the Iowa Soybean Association and your soybean checkoff. So, this is something I look forward to doing with you. And in this current time when the markets are very volatile and you're busy in the field, I want to give you some ideas of what happened in the markets last week, and more important, what are some of the key things that I want to be looking ahead that I think you should be doing next week. And I'll put up my phone number and my email later in this presentation so you can make sure that you can get a hold of me. So our topics today, we're going to go through a market review, then look at price summary, what happened last week, how does that compare to last year, three main factors to watch this week. I had a hard time getting that down to just three. I know many of you, and I've spoken a lot of meetings with the Iowa Soybean Association. You know, I like my charts, so I'm going to look at some charts and give you some price targets, and then also what to do this week. And certainly, I'll put my direct phone line up later, and also my email. If you have questions, I really enjoy hearing from you. So, what happened last week? It was a very good week for corn and soybean farmers. The USDA report came out and it was quite bullish for corn. And for the week, corn rallied 30 cents. It's been quite a while since I've been able to see that. That was a very good report, again, taking ending stocks lower. Soybeans, the report really was neutral. I guess maybe it was bullish because the numbers out of South America were not bearish. And what we had was a very impressive rally. We rallied 66 cents a bushel in the nearby soybean futures last week. The other factor besides the USDA report was President Trump lifted or reduced tariffs on everyone except China. And so we're seeing where that was mentioned, and wow, the stock market took off and corn and soybean markets took off. We also have a lot of lack of confidence, I think, in the US dollar with the huge deficits we're running, and we're seeing that the market just collapsed lower. You dropped 3% just 1 week, and we're now trading at the lowest level since 2002. Crude oil, I'm very concerned about global economic slowdown. Also, we see a slight thaw in our relations with Iran, and you had crude oil dropping down to $55 per barrel. So certainly it was a whipsaw week with news out of Washington, first viewed as being quite bearish. Then, when the bond market collapsed, that I think was a wake up call for Trump, and he blinked. And so now we're seeing where our relations with China are starting to improve. So, just put this into perspective. US dollar earlier this year is trading up at 110. And that really makes us very uncompetitive. And right now, with the dollar trading down at 99, we're down again today, early this week. And the next major support doesn't even show up on this chart. It's down to 95 to 96. And as I'm speaking, if you buy U.S. corn or soybeans out of the Gulf, you're buying the cheapest corn and soybeans in the world. So I think we're going to continue to see very good exports because of that. Energy, I'm not quite ready to make the recommendation that you should buy your fall diesel yet, but I'm sure taking a look at it, I would encourage you to check on your prices on your nearby gasoline and diesel prices, your fall gasoline and diesel prices. We're seeing some really attractive levels. Some of these are the lowest fuel prices we've seen since the pandemic back in 2021, 2022. So how did we do last week? I mentioned last week, very impressive. Corn up 30 cents a bushel, and we closed right near the high. We're kind of hovering near there. And as you can see, compared to a year ago, we're about 55 cents a bushel higher. Soybeans, finally, we had a nice rally, 66 cents up in the bean market last week. 1043 in the close again. No, we closed a penny off of the high, but we're still down over $1.30 a bushel from where we were last year. Crude oil down at 61.57. We closed quite a ways off the low. We're lower again today. And as indicated on the slides just a few minutes ago, the US dollar currently trading down 3%. We're trading at 99.93. Today we're trading at 99.60. So compared to a year ago, our stuff is on sale. The US dollar is 16% less than it was last year at this time. What about the three main factors to watch this week? I'm again watching what's going on in Washington, D.C. It was announced over the weekend that we're lowering the tariffs on cell phones, computers, and electronic. This is a very positive first step. I thought it would be quite bullish for soybeans, but we're really not seeing that so far. We are seeing some very impressive gains in the stock market. Will China respond and how? We'll have to see how this plays out here during the week. There is rumors, and I don't like to talk much about rumors, but I think they could be substantial, that we could see a meeting being set up with Premier Xi from China and Trump sometime later this summer. So they're talking about it, and you're always better off to keep talking. We met with Iran over in the Middle East and that positive weekend talked for several hours and agreed to keep talking. And this could lead to more pressure on the energy markets. Iran at one time was quite a major export market for U.S. corn and soybeans, and I'm hoping we'll get them back. We'll get planting progress today and watch extended forecasts. It's really unfortunate. We've had extreme flooding and extremely tough weather conditions. Southern Missouri, Southern Illinois, Kentucky, Tennessee, all the way through the Delta. And if you look at the most recent March 31st prospective planting report, you see that that area was supposed to be planting a lot more corn. Will they get it planted, or will it shift over to soybeans, or will they be forced to take more prevent plant? So it's too early really to worry about weather and planting in the central corn belt, but the fringe area, and I don't consider southern Illinois fringe area, but to some of the southern corn belt through the Delta, we'll be watching those numbers very carefully week to week. And then every Thursday, we get the U.S. Drought Monitor. We don't have any markets on Friday because of Good Friday, so 3-day weekends always make me a little nervous. Chart update. You can see this is the weekly Chicago Board of Trade corn chart. And we had the highs last year coming in June, July, and then wow, we really tanked the market all the way down into August. And so last year, you can see we were selling quite a bit of corn for our customers in April, May. There's an old rule I have: when you're planting corn, you should be selling corn. Unusual timing, we had a low in August, rallied back up to 504, and I think we're going to go up and retest that level again. Certainly, if you passed up $5 corn futures on the run up into February, I don't think you want to miss it here in April or May. New crop corn, again, we went up some 479, 480. Just couldn't get through 480. 479 and a half was the high. And again, this is unusual timing. We had this high come in late February. Then we collapsed all the way back down to 436, and now we're back up in about 465, 468. So these are some levels that, again, I'm not real gun-ho about forward selling in here. If you do need to sell corn off the combine, that 475, 478 level would be a logical place. Soybeans, it's been a tough road here. We had the highs in June, July of 2023. Came all the way down into August of 24. And again, look what happened last year, right into the April, May was some of your best pricing opportunities. I keep a lot of charts and teach a charting school. One of the things that I talk about in the charts is as prices are bottoming, you can quite often put in a series of M's or W's. And this is pretty good. Very good timing in here. And certainly 480 is going to be a tough level of resistance. We actually hit 1048 on the May beans. We hit 1058 on the July soybeans, where we recommended people have some offers in to step up your cash sales. So this has been a rally that we've rewarding longer term with the smallest soybean acreage number since 2016. I'm optimistic that have better opportunities for your new crop beans. Here we have kind of a double bottom here, 965, then 971. 1040 has been kind of a tough area of resistance. Ultimately, I think we go up to 1080 to $11 a bushel. So I like the basis on cash beans. I want to get the use of the money, but I'm not real gun-ho about forward selling a lot of soybeans. In all reality, most people need 1080 or $11 futures at a minimum before they're able to hedge in a break even. So be patient. I think as the year unfolds, we're going to have better opportunities. What to do this week? have offers in above the market to make cash corn and soybean sales in this rally. Like I said, we hit the target we had at 10.48 on May, 10.58 on July. The corn, we're still a ways away. I'm trying to get the corn back up to around 5.15, 5.20 basis July contract. I'm not saying to buy it, but I think you'll be pleasantly surprised. Check on your fuel prices through the fourth quarter of 2025. So it's just this is going to be kind of a key time, and we want to get the soybeans planted and corn planted. I do have a few customers in northwestern Iowa that are planting their soybeans first. That's how they have been able to get 70 or 80 bushel beans. So plant half the soybeans, jump into corn, then come to spread out the risk, finish up with beans. And this is the part you grow, but keep track of the markets. I always say you're growing money, not crops. And so this is an important time of year, even when you're busy in the field, to make sure that you're doing your job and getting the crop planted. If you have questions, again, I encourage that and give me a call, toll free in the office, 888-345-2855. I'm out later this week for a day, but I'm very good about getting back to people normally within 24 hours. If you're on the go, would prefer to email me. My direct email is alan.kluis@wedbush.com. Shoot me an email. And again, normally I'm pretty good at getting back to people within 24 hours. So this has been the inaugural version of Soy Market Watch. If you like this, let the staff know, let the directors know. If you've got suggestions on items you'd like included in future reports, again, give me a call, email me. We want this to be a worthwhile program for you. And a special thanks the sponsors, the Iowa Soybean Association and the Soybean Checkoff. Have a good week. Thank you.